I want to talk about the cycles. So what we see over here, that's the Bitcoin price over the long term on a logarithmic scale, and the horizontal lines here, that's the halving event. And the idea, how many people trade crypto, is they think that Bitcoin moves in a 4-year cycle, right? We've got 3 years of bullishness and 1 year of bearishness, and this tends to trade somewhat with the general cycles. Now, have a look at what happened after the halving events in the past. We tended to shoot up quite a bit. When we look at this green area, right, so let's zoom in a little bit. When we look at the green area, that's how many days have already passed since the halving, right? So the last halving was in April of 2024. This is how many days have passed. And this is days after halving for the prior cycle. So we can see how did the cycle evolve from this point onwards in the last 4-year batches. And when we look at the last 4-year batches, we've already peaked, right? So this is a commonality. We've already peaked, and everything that happened post, we still saw continued selling pressure, right? So we still saw this in 2024, we still saw this in 2018, and we still saw this in 2022. So it seems like the 4-year cycle theory still tends to hold somewhat. And this seems to be quite irrational, right? It seems like the halving event, right? So the change in tokenomics of Bitcoin tend to become less important over time because the newly issued Bitcoin tends to go down with every halving, right? So it gets cut in half. We are now at roughly 0.8% inflation in Bitcoin. Every year we get 0.8% of additional supply hitting the market. That's what the miners are getting. And with the next halving, that will be 0.4% per annum. So it should be less and less important. The halving event should be less and less important over time, from 0.8 to 0.4% to then 0.2, etc. Still, many people think that the 4-year cycle theory will prevail simply because there was a pattern that used to got established. It's a pattern that's very, very visible, and it might become a self-fulfilling prophecy, right? If we have topped out at similar points in time after the halving in the past, then there will be more eyes at that point in time on Bitcoin to potentially top out again. And then we do top out indeed, it becomes a self-fulfilling prophecy. If enough people think the price is high, then we just sell off afterwards. If enough people think the price is low, people start buying and start selling less, then we do indeed bottom out. So if enough people believe in something, that's actually what's going to happen. And the 4-year cycle theory is incredibly popular, and simply because many people believe in it, there is at least some buying and selling pressure based on that thesis. And so we have topped out at very similar points in time relative to the halving event in the past. And we did continue to sell for quite a long time, for several months, compared to the current point where we are in the halving cycle. So that's another indication that at least the people that are trading based on this narrative, they might still wait for purchases. They might not be impressed when on a single day we go up like this, right? We might have a few altcoins that are doing well, but in the grand scheme of things, the people that position larger amounts for longer periods of times, they might not be impressed. Overall, Bitcoin is just having a little bit of a counter rally in a still overall bearish trend. Here's another interesting chart. This is the Thermocap multiple. So this looks at how much the miners are currently making historically. So when we look at the historical mining reward relative to the current price, we see what is this relative development over time. There are lower highs, right? We tend to go down here over time, but we also tend to bottom at a certain level. If we just draw potential resistance and support, it's very hard to argue that the current drawdown from the all-time high has already finished. So this is another metric that tells us maybe we should be cautious in buying this potential bounce. Again, we could easily hit 80K in Bitcoin. I'm not arguing that. But after we are at the 80K mark, things get tougher. And then especially getting above 100K will be extremely hard, because that's then when we hit the longer term moving averages. So I have to change those two levels. I was on the wrong scale here. So the 1 day metric is what matters. It's the resistances are at 88K and at 77K roughly, right? So those are the two that we might potentially rally towards. And then once we get closer to those, I think it's very wise to rather be cautious with further buying. If you're a very short-term trader, getting into the rally might make sense. But if you're positioning for several weeks, I think it's dangerous to buy into the current rally. The backtests simply do not suggest that this is the best time to buy. We see this kind of pattern in the thermocap multiple, also in other metrics. For example here, the net unrealized profit and loss. So how much is the average Bitcoin investor currently in unrealized gains or in unrealized losses? And we tend to trade around that level. And that's, I think, very important. Crypto, I believe, tends to trade in a range against its psychological anchor point. Because fundamentally, right, we can't really value Bitcoin. We can't really say a Bitcoin is worth 1 million or just $10,000 because Bitcoin doesn't create any cash flows, right? In traditional finance, we can simply just estimate the future cash flows, discount them to the present, right? We calculate the present value of future cash flows. We figure out what are the future cash flows, we discount them to today, we get the current price. That's what we do with traditional finance. We do this with property, we do this with stocks. With Bitcoin or with gold, we can't really do that because we don't have any future cash flows. Thus, I believe that the price simply tends to trade around a psychological anchor point. If enough people are currently in profit, some people might consider taking that profit. If enough people are in unrealized losses, the selling pressure tends to rather ease because nobody likes to realize losses. So maybe you already own a house, right? If you have a house and that house suddenly goes down relative to the price that you purchased it at, are you very likely going to sell the house? The answer is no, right? If you bought it for $1 million and it's going down to 700K, if there's no urgency to sell, you would simply just wait out this dip, right? You believe that houses long-term appreciate. That's why you bought it in the first place. And so if you consider to ever sell a house, you would just do this at profit. So your net unrealized profit or net unrealized loss matters for buying the house. It's the same for Bitcoin. If you buy Bitcoin and you believe in Bitcoin long-term, if you believe that fiat currency devalues quicker, that the fiat supply expands faster compared to Bitcoin supply, you believe that Bitcoin in 10, 20 years will be higher than it is today, then if you're currently in losses, there's a very low likelihood that you're going to sell at the losses, that you're going to realize the losses. So if the market overall, if the market in general is currently in net unrealized losses, the selling pressure tends to ease. And so the buying pressure has an easier time to take over the price development. So it makes sense to buy Bitcoin when the market as a whole is in net unrealized losses. And it makes sense that this is hovering around the zero line. Sometimes unrealized gains get taken and unrealized losses simply get ignored. And the long-term dollar cost averages take over, the long-term buyers, they take over. That's when a bear market tends to bottom. And I like this chart a lot because we've got the fundamental explanation of what's going on. But I also like this chart a lot because as with the thermocap multiple, we do have quite strong supports and resistances here, right? So the tops tend to align well, the bottoms tend to align well. It shows us that the bear markets tend to be less severe in terms of unrealized losses, but it also tells us how the bull markets tend to be less exciting over time. And again, we are not yet at an extreme value here. Again, this shows us that we should rather be careful to buy into current rallies. I do think there is a good chance that this bear market is not yet over. There's a lot of different models that tells us exactly that. There's a 200-week moving average, right? Also a very popular metric. It used to be very good to time bear market bottoms. We tended to bottom perfectly at that level. It wasn't as great in 2022. So since Bitcoin appreciates slower and slower over time, the 200-week moving average tends to overestimate the potential, and we tend to now fall below that. And that would be my base case as well. I do not think that we're going to exactly bounce at the 200-week moving average. We're likely going to fall below that again, as we did in 2023. So even at 58K, we're probably not yet cheap enough. And so 58K is the absolute minimum where I would start buying in, right? We need to be at least below the 200-week moving average. Check this out. This is the Bitcoin power law. So this is not just a logarithmic chart here on the right. It's also a logarithmic chart in terms of how much time has currently passed. So have a look at how the first year has way more distance than the last years over here. And when we look at that chart, right, Bitcoin tends to trade in a relatively predictable range. Where is the potential bottom? According to the power law, it's at 33K, roughly. So there are some models that tells us in the lower 50s, it might make sense to buy. There's other models that are a bit more conservative. Here is the realized price. It's at 54K currently. So that's the average cost basis of the market. In a bear market, we tended to fall below that realized price by roughly 20 to 30%. So 54K might not be the bottom. It might be 40 something K, right? 45K or so, according to this metric. When we look at the long-term holder realized price, right? What's the average cost basis of the long-term holder? That's currently at 41K. And again, we tended to fall below that in a bear market. So still, right, when we look at all of these metrics, we might make an argument that it could make sense to start buying at 55K with the expectation that we could fall further. But then also, when we've got that expectation, we should be able to buy more and more as we fall more and more. 55K is maybe just the first purchase, and then we buy more as we go to 50K, we buy more as we go to 45K, and potentially even more as we go to 40K. And if you go below 40K, then of course the market would be extremely depressed. If you go below 40K, then very likely traditional finance is also massively selling off. Then maybe AI stocks are going to sell off. Then things get really problematic. But if the general market, if traditional finance is not selling off, then the 50 to 40K range is a good buying range. At least if history is any indication. Here is the balance price. That's currently at 40K. That tended to be a very good bear market bottom. And we are currently going down in the balance price. So if we continue on that merry way down and we don't suddenly crash to 40K, but we just bleed there slowly, we might bottom out at a even lower level, below 40K slightly. And here is the coin value days destroyed. That's currently at 47K. That also tended to be a good bottom. Now, not all of those models can be correct, right? When we bottomed out for some models at 50K and for other models at 40K, then one of the models has to break and we don't know which one. And so that's in general how I think about things, right? No model is perfect, but some of them are useful and they can give us a range. And there's different kinds of market participants that trade based on different rules. Some might look at the 200-week moving average, others might look at the 4-year cycle theory, others might look at the realized price, others might look at something like the CVDD. The sum of all of this activity then makes the price discovery. And so because of that, because we can't be certain what kind of investor is currently betting based on what kind of model, we don't know for certain where we bottom out. But what we can say, given all of those different models, what we can quite certainly say is that most of those models do not predict that we are currently already bottoming out. And because of that, we should rather be careful, at least in the medium term. At least as long as we are below the best moving averages in Bitcoin. And that's how I fundamentally play this market. I simply just look at where is currently the trend. And if we are still below that, I tend to bet on falling prices. And I am not impressed by days like this. Yes, if we are betting on falling prices and a day like this happens, that's not pretty. But in general, the approach has been working phenomenally for us, right? We have been betting on falling prices since the 113K mark. This is where we sold our spot holdings and we made money during this decline, right? We even bet on falling prices with perpetual futures. We sold our spot at 113K. We have not made our 40% losses with our spot holdings. At the same time, with our more risky holdings, with our perpetual futures, we made money during the decline. And so I am very happy of where I am right now. Even if today wasn't great for me, Even today, I quote unquote made losses. I am not looking at things in that short of a time frame, right? I want to compound my wealth over the long term, and that's in general what we all have to strive for, right? We have to grow our capital faster than monetary debasement, faster than the 6.8% per annum. That's really what it's all about, and we have to forget about the performance in the last 24 hours, in the last week, even in the last month. We have to simply zoom out, we have to take a step back. And if we are able to compound our wealth by say 20%, 25% per annum, and we can do this year after year after year, we can simply just work hard, we can save a lot of money, we can put the money into a trading strategy like that. And if you compound at that rate, then just after 5 to 10 years, we can probably already retire, right? Depending, of course, on lifestyle inflation. But really, we don't need that much of a return. As long as we outperform the general market, as long as we outperform the monetary debasement over time, we are okay. Right? Of course, the more we compound, the better, but we really don't have to double our capital every year. If we try to double our capital every year, then it's just a matter of time until we go down 1 year by say 70 or 80%. And that's a problem if your net worth relative to your income is relatively high, right? You can't save your way out of a drop like this. If your net worth is just a few months worth of your salary, then of course you can go very much risk on, you can just save for a while. But if your net worth relative to your income is high, it's several years of your income, you have to be more diversified, you have to be a bit more cautious, and you don't want to have those 80% drops. And that's how I fundamentally think about these things. I look at risk mitigation. I want to not be involved in the market when we crash by 70 or 80%. I don't want to be caught up during times like this. And yeah, our trend follower has been able to sell quite early, right? Over here, right? How many people actually saw the bull market top at the time? Feel free to watch prior videos on this channel that were published in October of 2025 and compare the videos on this channel to other crypto channels and see what their sentiment at the time was. You will see quite a stark difference. Don't get too overhyped about a day like this. Be prepared that in the short term, we might rally all the way up to the 77K mark, potentially even close to 90K. There is the potential we could go up, but I'm not betting on that because the general macro is still bearish. And so I'm just looking for new entry opportunities for shorts during days like this. And if you continue to rally a bit further, I'm just looking for another short. And that's fundamentally how I want to be positioned. In a bull market, I buy the bottoms. In a bear market, I short the tops. This clip was just a tiny moment out of a much longer value-packed video. To watch the entire episode, just press over here. Take your time. Looking very much forward to seeing you on the other side. Just press over here. Cheers.